Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you get some good trades. It's been an incredible couple of weeks since I invited traders to join me in a webinar about the DOTS method and why hundreds of traders are using DOTS. Well, those traders who joined me in the webinar, many of them jumped on board and started trading with DOTS and using the techniques I teach in the DOTS trade room, and they've been hitting it, literally hitting it. And so some of you might have just received an email from me about what's going on in the DOTS trade room, about what these traders are doing. And so I thought it'd be best to not only talk about the trades in that email, I thought it'd even be better for me to show you the trades that took place today from folks in my trade room. And some of those traders have just recently got the DOTS method and started using it. Before I jump in and show you the trades, one of our new DOTS users by the name of Tim recently wrote me. And this was a great email. He said, "From the time I purchased the DOTS method of trading, I have paid off my investment over 6 days of trading. That is only trading the Asian session and the first hour of the US session. My trading gain over these periods before the DOTS method was average at best. Thanks again from a very happy trader." It's emails like this that just really excite me, get me encouraged that, I'm helping traders get where they want to go. So with all that said and done, let's just jump in and show you those trades that I mentioned in the email. Now, one trader wrote me this morning, and he goes, "Hi Dean, today 110 pips in the pound kiwi, plus 40 pips in the dollar yen. I'm a happy pipper." Now, David, he started in the European session and caught just the pound kiwi. Now let me show you this. Here we have the DOTS levels and the Guppy multiple moving averages. Now you can use the Guppy multiple moving average or you don't have to. We show different techniques of trading with the DOTS levels. Again, the DOTS levels are designed to show you entries, exits, and potential targets as you trade the market. It's based on price. It looks at current market conditions, compares those current market conditions with historical movement in the marketplace, and defines levels that have a high probability of the market reaching. So long story short, here's what took place for Dave. The market makes a move down, it hits its sell entry, and it bounces back up. Now this level up here is the sell stop loss level. The market did not come back up and hit the sell stop loss level and rolled on down. So from the entry level down to the sell target number 2 level, you can see it's 113 pips less the spread. He got 110 pips just on that one trade. Now he rolls over to the US session, and during the US session the dollar yen started making a move when we had worse than expected retail sales number. We didn't catch it right at the sell entry level, but he caught it as it was moving down, and as it was coming down the market just kept on moving down and down and down, and we started looking at some other ways of determining where the market's going. As a matter of fact, I had mentioned to folks to look back at last week or last few days. Let's check for average lows, and let's see what the previous week's low is. Well, the previous week's low is about 119.05, and the average low on Thursday and Friday came out to be about 119.20. So what did he do? He's in on the trade. It reaches beyond the sell target number 2. He holds in on that for another 20 pips and comes out of the trade as the market started pushing back up in this area. Now, we have traders from around the globe, and various traders trade the European session, they trade the Asian session, they trade the US session. And this particular trader, when the core retail sales number and the retail sales numbers came out, it kind of bopped around and then it started making a push on up. Right around the buy entry level, it started making a move up, and it pulled back, and he's considering where to get out. Now some traders will just get out right at the buy target number level, but with all this upward movement, all the energy that we saw today in the euro and euro yen, he was looking for the market to push on up. And so I suggested let's go look at yesterday's high. Well, we marked the level here at yesterday's high, and the market had pinned right to that level, and then the market pushed above it and then came and sat on it and kind of bebopped around, and right in this area he elected, let's go ahead and pull the trade. He averaged 50 pips on that one trade alone today. Now another trader in my room, Jerry, he's a character, but Jerry wrote me today. He said, "Dean, pound dollar 22 pips this morning. Where else can you come in late and just enter trades and make pips. This was the pound dollar today. Had a nice push up, and he came in late. So he comes in after retail sales happens. And there's this particular technique that we use in the Dodge trade room. And I mentioned to folks, look for a bounce around 157. As a matter of fact, I jumped in long at 157, mentioned to folks, here's our setup, this is what we're looking for. And I looked to trade up to the buy target number 2, and that's where I came out at. Jerry got in a little bit late on the trade, but walked away with 22 pips on a beautiful little setup that we had as the market was breaking above the 157 level. And I just traded to the buy target number 2 level that had already been laid out at 8 a.m. Eastern. I'm just going for that level because it's a high probable target. So I just want to briefly show you the trades that took place today. Some of the trades that took place, these are not all of them. Tamara picked up the pound Aussie on a retrade. Had a great setup on the dollar CAD. It made what we call an arrowhead setup. It was a great trade for about 20 pips or so for many of us in the trade room. If you're sitting there and you've been thinking about dots, maybe you've seen some of my videos, maybe you're just now hearing about the dots method, go over to www.compassfx.com/dots and watch a brief little video about the dots method. You'll get to see some setups we talk about. You get to see why I went about making dots. What's it all about? You even get to see a track record on dots going all the way back to 2012 as we track currencies on how they perform with the dots levels. And some of you who have dots, I've been receiving a number of emails, where do I go to get into the dots trade room? Well, if you want to join, it's a monthly subscription. It's very easy to do. Just simply go over to www.compassfx.com/dots trade and join me in the trade room along with several traders, some really good traders from around the globe as we trade the market using the dots method. Well, this is Dean Malone with CompassFX. I hope you get some great trades. We'll talk to you next time. Take care. Bye-bye.